All right, welcome everyone to another live stock pick, another live stream where I'm going to be picking stocks. But in today's live stream, we're going to be doing something just a tad bit different. And in today's live stream, what I'm going to be doing is I'm going to be showing you guys how I pick stocks that I want to trade for the following day. A lot of people have been asking me about this. Now, I've tried doing the live stream directly on TikTok as well as on Instagram, but because both of those platforms are mobile, it's kind of difficult to do that. So, what I'm going to be doing now is I'm going to be focusing a little bit more on um, doing my live streams on YouTube. So, if you guys are watching on TikTok, you're probably watching on me from TikTok, seeing the back. But if you want to see uh, what's going on here in front of me, then you guys can go over to my YouTube channel, which is going to be Adleytelfort697. All right. The link is also in my profile on TikTok and Instagram as well. So let's get started. So the first thing you got to do, as a new trader, it's very difficult to find stocks. I've said this in a lot of my other videos. It's very difficult to find stocks to trade as a brand new trader, and you don't want to force a trade by just jumping in and picking any kind of random stock that somebody's recommending from online, or just because you see there might be a possible setup. Right. So I typically say that you want to use something like FinViz. You want to join maybe something like FinViz, which is a really great stock screener. And with FinViz, we're going to go over to our stock screener over here. There's a lot of great information on FinViz, and it can help you out a lot. But let's say you're a brand new trader and you're starting off with about $300 to $500, right? The first thing you want to do is you really want to go over to your pricing, and you want to buy stocks that are going to be in your price range. There's a paid version of FinViz, and then there's also a free version of FinViz. I'm using the paid version where I'm able to customize the price range and everything else like that. So I typically say, as a brand new trader, you probably want to go with something between $20 and $10, right? And one of the things that I've pointed out before in the past is, let's go ahead and delete that price range right there. Let's go back here. And I'm always pushing this because I want you guys to see we're starting off with originally over 10,296 stocks in total that's available. So the first thing we're going to do is we're going to go ahead and we're going to bring that down to, we're going to filter that down from price point, any stocks with the price point of $20 to $50. So by doing that, it brings us down from 10,296 stocks to 3,808 stocks. Next, I'm here in the US. I would want to look at stocks that's primarily here listed here on the US stock market. And that brings us down to 3,637 stocks. Next, what I would want to do is I would want to go look at our average volume, right? Typically, if you want to have a real solid selection of stocks, you really want to focus on stocks that's with your average volume, which is over 2 million, right? And when when they say average volume, basically what it's saying is, over the last 30 days, on average, each one of the companies that you see listed here on this list, they've sold an average of, well, no less than 2 million shares of stocks on a daily basis for the last 30 days. So that's why average volume is kind of important, because it kind of filters it through and it gives you stocks that are really moving. There's a lot of people or a lot of investors buying and selling those stocks. You don't want to necessarily buy a stock that, maybe only a few hundred or a few thousand people are involved in, because they're not selling a lot of shares. Therefore, the stock really doesn't move. So the average volume also helps you to find stocks that their price is constantly moving, whether it's up or down, but there's action in those stocks. We've all been there, where we buy a stock and within, a week or whatever, the stock really's only moved like 5 cents up or down or whatever the case may be. And those are the things that you want to avoid. And that's what the average volume does. The average volume helps you to find stocks that are moving. And so that brought us down from about 3,600 stocks to 261 stocks, right? So from 10,269 stocks to 261 stocks, and we've only put in 3 filters, right? So it's not overly complicated, right? We've got our price, which is stocks between the price point of $20 and $50. We don't want to buy stocks that's $100 or more, because if we buy stocks that's $100 and we have a $500 account as a broker, what that means is we'll only be able to buy 5 shares of that company. So even if you buy 5 shares of that stock and that stock only moves up $1, you only made $1. So you want to try to get as much bang for your buck as possible. All right. I did an example like on my last couple live videos. I did an example of Tesla stock. Tesla stock was roughly Tesla stock was roughly about $300, and Tesla stock did an average movement of about $16 a day. So if you bought a Tesla stock for $300 and you only made a $16 profit for the whole day when it had all that movement, really, was it worth it? Maybe it wasn't. So you want to be careful about that. All right. Next thing that we're going to look at is your technicals. Over here, we're going to look at your average true range, and that's what we were just talking about. Your average true range, you can select stocks that's moving, doing a certain amount of movement. Now, the average stock typically moves about $2, about $1.50 to $2 a day, right? And we're not talking about the market makers like Microsoft and Tesla and Apple, but we're talking about like the average stock. They're typically doing about 150 to 250 on average on a daily basis. So I'll give you guys an example here. Right now we have 261 stocks that are available, but if we say we want stocks that move the minimum of $2 a day for the last 14 days, meaning these stocks move at least $2 a day, up or down, they move at least $2 a day, then these are the stocks that would appear. We went from we went from 261 stocks to about 27 stocks. You see? Now, if we lowered that number and we said, hey, we want to look at stocks that only move at least $1 a day. The minimum is $1 a day. It does move more. Now we have 99 stocks available. So if we went with the $2 a day as far as the minimum movement, whether up or down, because we're trying to make as much money as we possibly can, then what that does is that actually that gives us only about 27 stocks. But if we lower that and say, well, we're willing to look at stocks that are moving at least $1 a day or more, then that gives us 99 stocks to choose from. So this is kind of like how we are able to filter it down and look at stocks which fits our particular criteria. You don't have to know all of these technical other things that's going on with the technicals, like 200 moving day simple average movement and patterns and all this other stuff. Only thing you need to know is these 3 simple filters: price point, average volume, and the ATR, which is the average range. And that fits all the criteria that you're looking for. Now, once you've done that, what you have to do now is you have to take that information and you have to transfer that over to TradingView, which is your charting software. Now, in TradingView, what you're going to do is you're going to look at each one of these stocks, and you're going to look to see if you can clearly identify an entry point. If they're in an uptrend, can you clearly identify the entry point? Can you clearly identify the take loss point and the take profit point, the stop loss and take profit point? And so, but before we go over there, let's say we want to put this in alphabetical order, this list, not alphabetical order, but we want to put it in an order where we can say, for example, we can go over here to technical, and we can say on technical page, we can go and say, well, we want to put it by price. We can filter it by price to say, well, I want to get it from the lowest to the highest price point. So this, as you can see, the lowest price point we have is $20.11. We did say we're looking for stocks between $20 and $50. This is the lowest price point. If we say that, well, we want to look at the stock that have the most movement, meaning, remember we talked about our average true range up here, which is what they call the ATR. We can go over here and we can click on the ATR. And if we click on the ATR, the first time we click on it, our ATR is set at, we want to see stocks that have moved at the minimum of $1 or more over the last 14 days, the average. So the first set of stocks are the stocks that's only moved from $1 and then it starts to go up. But if we click it again and then we go ahead and we filter these stocks, our ATR, and we say we're looking for ATRs, uh, we're looking for stocks with an ATR of with the highest ATR, then as you can see, we have a stock here with the highest ATR of $14.35. So from there, we can actually look at this. We can actually go through each one of these stocks right here, a list of each one of these stocks, and then we can figure out, okay, we can say, okay, well, let's look at this stock. Is this stock tradable? Um, and then from there, we're picking the stocks that have the most amount of movement. Um, and then we're going to purchase that stock, whatever fits our criteria, where we can clearly see an entry point and an exit point. As you can see over here with the price point is mixed, it's not in order from highest to lowest because we're focusing more on the stocks that's going to give us the better ROI, return on investment. Now, once we've done that, you go back over to overview here. And the reason why we're here in overview is we're still keeping that same setup with the ATR. It's the same, the list is still in the same order. But what we want to do is we want to be able to see the industries and the sectors that each one of those stocks belong to. Because if we are going to trade, if we're going to trade, if we're going to go through this list of 99 stocks, we can easily take out stocks that we don't normally trade. And for those of you who've been following me on YouTube or Instagram or even TikTok, you guys know the stocks that I prefer to, the sectors that I prefer to stay away from is the healthcare sector. And I don't recommend, as a new trader, any new trader, trade any ETFs. Okay. So here you'll be able to see if a stock belongs to the healthcare sector. And in the industry, you'll be able to see if it is an ETF so you can avoid it. Because out of these 99 stocks that are available here, you may end up only looking at 60 of them because the other 40 may be healthcare stocks and ETFs, which you wouldn't even bother looking at. All right, so let's kind of take a quick look at, because we have about 15 minutes left. Now, let's take a look at some of these stocks right here and break it down in trading view on our chart. Okay, so the first one we're going to be looking at is going to be BMNF. All right, so we're going to go back over here to trading view, and we're going to go and we're going to click over here, and we're going to open up the chart for BMNR. BNR. All right. So we pull up the stock and here. All right. And here what we can do is we can see here we can see our charts. And let's open that up a little bit more, make that a little bit bigger. And here we can see this one. Now this particular stock, we can see that we're in the uptrend, right? Now, for those of you who are new traders or and you're not familiar with trading view or setting up a chart like this, if you guys were to go over and sign up for my course on Udemy, which is called Stock Trading Simple Beginner Guide, you'll be able to, here I teach you how to go through FinViz, how to set up your charts on FinViz, how to filter your stock list on FinViz. And then we also teach you how to set up your chart on TradingView. So this way, your charts can look like this and you'll have the same indicators that we have here. And indicators are basically tools just to help you understand, like just to help you see what other traders are doing primarily. One moment. Just so you guys can see. I'm sorry here. Okay, got a lot going on today. All right. So just so you guys can see what's going on with the, so you guys can see, I got lost track here. All right. So what it does, it really helps you to see what other traders are doing, what other professional traders are doing. So for example, here we have our green line and our red lines, right? Those are our moving averages. And how I have mine set up is basically very simple. I have my moving averages color coded. And the reason why I have it color coded is because when the green line's on top and it's pointing straight up and the red line's at the bottom and it's pointing straight up, it basically lets me know that we're in an uptrend, right? And if the red line's on top and the green line's at the bottom and it's pointing straight down, it lets me know that we're in a downtrend. Next, I have our red line here, which is this one here. This is our areas of resistance. The blue line here is our areas of support. So we have our moving average. We have our areas of support and resistance. So moving average is one indicator. Support and resistance is a second indicator. And then over here in this section where we have the purple line, this is our RSI. What the RSI does is it lets us know whether a stock is oversold, meaning the stock price has dropped so fast, so quickly that you know it's an unusual situation. For some reason, there was a sell off, and now the stock is at a really low price where it's oversold. And most professional traders use the RSI to say, okay, well, it's at an oversold point, so I could use it to buy right. I should buy the stock right now because the stock has room to move up. The RSI also lets us know when a stock is overbought. So let's say some really good news about a company came out or something happened and the stock just goes through the roof. Now we know the stock is over. So what the RSI does is RSI says, look, this stock is going up. It shouldn't be at this price point so quickly at this point in time because something unusual happened. The stock price may be overbought. And a lot of professional traders use that as an indicator to sell and to take their profit because there's a chance that the stock is going to drop because other traders are going to look at the RSI and say, well, the stock is overbought. So this is the thing about trading the stock market. There are indicators there that kind of help you understand exactly what's going on in the market. You don't need to, listen to some influencer or somebody who's telling you you need to buy this signal, this and that, because they're just using the same information that's here. And you want to focus on using indicators that the majority of professional traders are using. You don't want to necessarily trade using indicators that somebody created and it's something new that nobody's ever heard of. If you hear that, then you're going to understand something. If you trade that stock, you're more than likely going to lose. You're going to trade with that indicator, you're more than likely going to lose money. All right. But we'll get more into that in a little bit because we have about 12 minutes left. All right. So with this first stock over here, our moving averages, green lines on top pointing straight up, red lines at the bottom pointing straight up. It lets me know that we're in an uptrend, which, as you can see, we are in an uptrend. But I wouldn't necessarily care to trade this stock. Okay, if you guys have watched some of my other live videos, you'll see this one was something. This is a stock that's been popping up on my screener for the past like 2-3 days. And the reason why that happens is because there's been a lot of movement in the stock lately. But as you can see here, the stock is normally around the price point of $10 and $3, but something happened that caused the stock price to explode. So this is not normal for the stock price. This is not normal for the stock price to explode like this. So therefore, I would not necessarily buy it. Okay, or even look at buying this stock for right now until it's in this area for a couple more months or so. But right now, with this big jump, you would actually have to do the research to find out what caused it to jump. And if there is good reason for it to jump, then you can trade it. But just looking at it at a glance, I would say this is not a stock that I would trade. Then I would go back over to my screener and I'll say, okay, what's the next one? The next one would be SBET, which is a betting company. SBET, let's go there. SBET, and we'll just go ahead and open that up. And from there, we're going to open that and we're going to see where we stand with this one. It's the same thing. All right. Now, with this particular company, the stock did jump really high. As you can see here, the stock really did jump and then it came back down. So you look at this and remember, we're looking at everything here on our daily time frame. So each one of these lines represent one day, right? So normally, if we enlarge this here, you can see normally there was a lot of small candles. Look at these small candles over here. This is like literally between $3.03 to what is it? $3.32. So it was like a 20 cents move on average during all these months over here. And then all of a sudden, there's this big jump right here, and the stock moves all the way up here from like $3 all the way up to how much? The highest point was for this stock was like maybe what, $60, right? So when stuff like that happens, what what you have to understand is it could be called market manipulation. This is why you'll see a lot of times traders will tell you, or people who are teaching you to trade will tell you, they don't recommend that you actually trade a stock that is less than $20, because those stocks can easily be manipulated. I had to refresh the page here. Just give me a second. So we'll pull that back up. Okay, so it went from all the way down here about $3 all the way up to actually $124. Okay, now there's two things that can cause this to happen, right? One could be market manipulation, or the second thing could be a split. Okay, so you never want to trade a stock. Well, me personally, I do not trade. And there was a stock split right here in May, right? 1 for 12, meaning for every 12 stocks you got, they transferred it over to one, right? They tried to consolidate their stocks, and that pushes the price up. So when you see something like this, it's either market manipulation or it's a reverse split. Like this right here it was a reverse split. They do this when the price is really low and they're probably going to get delisted. There's not enough activity in the stock. And what that does is, by doing a reverse split and say for every 12 stocks there is, they're gonna consolidate that into one stock. So for example, if your stock was only worth, if you had 12 stocks that were on each, if you had 12, well, let's say you had 12 stocks, right? And those 12 stocks were worth $1 a piece. When they did a reverse and they consolidated those 12 stocks into one, now you only have one stock, and that one stock is worth $12. So the price of the stock went from $1 a share to $12 a share. And that's exactly what they did to push the stock up. But when they do that, what happens is the stock gets pushed up artificially because of the price, but everybody just starts selling off, and the price just automatically drops back again, and it comes right back down to that same price range. Right now it's hovering around 20, 23, $24. Me personally, if I notice a company has done a reverse split, that lets me know the company's in trouble. So therefore, I wouldn't necessarily even consider trading that particular stock. Okay, and if you go back into these companies' histories, you'll see that they've done several splits before, because it's not a stock that a lot of people trade. Next one that we would look at on our list would be VOYG. All right, so let's go over here. Let's pull that up. VOYG. And over here, hopefully we can this stock. Well, I'm probably going to change the title of this live or this video and call stocks that you should not touch, right? Because remember, we have 99 stocks that showed up on our stock screen that fit a certain criteria. So what we're doing now is we're going through that list to see if there's any stocks that we can possibly trade. Now, this stock showed up on our list because for the past 14 days, this stock has been selling at least, has been going up or down at least $4.32. That's the ATR that you can see right over here in this section. At least $4.32 right over here. And this stock has got a volume of over 2 million shares of stock sold on a daily basis. But the reason why I will not sell it, or I wouldn't even consider selling it, would be because of this. There's not enough history. Okay. There's not enough history in this stock. This stock has only been around since June 11, 2025. So it would not be worth trading this stock. And let's pick a few more on random here. Let's look at ENPH. All right, let's look at ENPH. All right. So now this stock over here, and this kind of goes back to what we were talking about earlier. I'm going to see if I can just make this just a little bit smaller. I know it may be a little harder for you guys to see it, especially if you're watching on your phone. But as you can see, our moving averages, and this is why I have them color coded, just right by looking at the color coding of our moving averages, we can see that the red lines on top is pointing straight down, green lines at the bottom is pointing straight down. So when I look at this, I can automatically tell that we're in a downtrend, right? But right here, we can see where they're coming closer together, like they're about to touch and cross over. Once there's a crossover and the green line is now on top and the red line's at the bottom and starts to point up, that lets me know that we're in the beginning of an uptrend. So right here, we can see that the stock is clearly in the downtrend just by looking at it. So if I don't have the ability to short because my account doesn't allow me to short, I don't have enough funds in it, then I would just say, hey, you know what? I would set an alert for, like, you can click on these moving averages and set an alert to say, hey, when the green line crosses over on top of the red, send me an alert, because then it can possibly be going back into an uptrend, and then I can go ahead and trade it. All right. So right now, looking at this stock, it's not tradable on the daily time chart. And then if you look at our RSI over here, the RSI is pointing straight down and it's below the red dotted lines, which is the 50. And as long as it's below that, that lets us know that we are in a downtrend, at least on the time frame that we're looking at, which is our daily time chart. But if we go over to our 4-hour time chart, we can see, once again, it's still confirming that on our RSI, it's still pointing down. It's below the 50 mark. And here we look like we're about to have a crossover again where the red line is going to be on top. Okay. So this stock is not something that's tradable as of right now. All right. So now the next stock that we're going to look at would be, let's pull out another random one, TSSI. Okay. So we're going to go with stock symbol TSSI. Let's see how that one looks over here. All right. So this stock over here, this is a really good example. And remember, guys, this is something that I teach you guys when you go, or when you guys sign up for my course that I have here on Udemy, Stock Trading Simple Beginner Guide, because there's always, how can I put this? There's always the exception to the rule, right? So remember, I told you guys, our moving averages are color coded to where when the green line's on top and is pointing straight up, like you see here, and the red line's at the bottom and is pointing straight up, lets us know we're in the uptrend. And sure enough, you see the stocks, they're going up, right? And then you have the red lines on top, green lines at the bottom, and that lets us know that we're in the beginning of a downtrend. But this is what we call a fake death cross. All right. So when the green line's on top and the red line's going up, we call that a golden cross. Golden meaning we're going to make money. We're going to make gold. The death cross meaning red lines on top, green lines at the bottom, meaning the stock is going to be going down and we're going to be losing money. Hence the name, the death cross. So what happens here is this. We have a red line, which is our moving averages on top, but look at it. It's pointing up. It's pointing in the upward trend, and our green line's at the bottom and it's pointing down. So we're not in a true downtrend right now. We're in a real downtrend when the green line's at the bottom and it's pointing down, and the red line's on top and it's also pointing down. So when that happens, we know we're in a true downtrend. See, right now, the stock price is moving sideways. Right now, we're in a sideways trend because the red line is moving upward and the green line is moving down, right? So, and then if you look over here with our RSI, the RSI is above the 50, which is the red dotted line. So you cannot really look at this and say, well, we're in an uptrend, we're in a clear uptrend, or we're in a clear downtrend. Right now, we're in that area or that zone of uncertainty. So you would want to keep an eye on this one for right now to see if it turns into a downtrend or anything else like that. Now, I'm going to talk about something else here. I mentioned, okay, so you'll probably hear a lot of people say you can make money in the stock market when the market's going up or when the market's going down. And that's absolutely true. You can make money in the stock market when the market is moving up in a situation like this with a simple $50 in your account if you're able to buy the stock. This stock right here at the price is $26.96. So if you have $27, you can buy one share of the stock, right? And you can make money when the stock is going up. Now, if you want to make money when the stock is coming down, there's two ways that you can do that. One is you can have at least I think it's most brokers would require anywhere between $3,000 to $2,500 available in your account, and you may only be able to buy a certain amount of shares, because you have to have a certain amount of margin or liquidity available if you want to short the stock. And shorting the stock is saying you're betting that the stock is going to be going down, and As the stock goes down, you make money. But if you're a new trader, the second way that you can also make money when the market is going down is by doing an option trade, which is called a put. Okay. Option trades are very risky. You can make a lot of money, but you can also lose a lot of money. Hence the risk to reward ratio. In order to win big, you got to be willing to lose big. All right, so you can also do that with an option as well. And I plan on making a course on that and posting it on Udemy or Skillshare, something in dealing with options and also Forex down the road. Okay. But we have we're going to be running over about a minute. So let me stay on here for another 5 minutes and see if we can find one more other stock that we can trade. Let's look at another one here that we can possibly trade. Let's look at a random stock here. There's a lot of software stock here. Let's look at TOST, and then we'll call that a day. All right. TOST. All right, this right here. Let's pull this one up. Okay, great. So we finally found a stock that we can possibly trade. All right. And the reason why I say that is, remember, I have everything color coded and I teach you guys how to do this and set up your charts with these indicators. Just by looking at this, I can tell that we can possibly trade this unless I find something else here when we do a deep dive. The reason why I say that this stock is tradable is because here we have our areas of resistance. You see these red lines here? Those are our areas of resistance. The stock just broke through that area of resistance. So the stock is well above it. You see the stock price is over here at 48.06, which is well above the red lines here, which is our areas of resistance. And then we can look at our moving averages. Green lines on top, pointing straight up. Red lines at the bottom is pointing straight up. So this stock, just by looking at it at a quick glance, it looks like it's very tradable here. And then we go down and we look at our RSI. Our RSI is well above the 50. Okay, it's not below the 50. It's not pointing down or whatever the case may be. So we can possibly buy this stock. It's going into the area of being overbought, but here we can buy it. And if I was to buy it here at $48, I will expect it to do a short pullback, maybe coming down here to about 46 and then going back up. Now, remember, a stock never ever just goes straight up. Okay, they do what they call a pullback. Like if you look here, the stock went up. Okay, let's see if we can draw that in so you guys can follow along. So over here, you can see the stock price, it went up. And then let's go over here. Let's put a green right here. So the stock price here, it went up, right? And then it came back down and it went back up and it came back down and it goes back up and it comes back down and it goes back up, right? So you got to expect stuff like this, all right? And this is what we call a pullback. See, the stock goes up, it does a little bit of a pullback, and then it goes up, because what's happening here is typically our day traders and swing traders, they're buying here at this point. The stock goes up. When it gets up to this point, your day traders and swing traders, they're selling. And then once it comes back down, the people that missed it over here, they're going to buy it again and they're going to push the stock back up. And so once you become used to trading, or if you are a professional trader, you expect these things to happen. So here we have 1, 2, 3 candlesticks, green candlesticks, right? So I do expect a pullback, maybe 1 or 2 red candlesticks. And that also lets me know that we're supposed to be pulling back. If I look over here at our RSI, when the RSI is about to get out of this purple area, which is about 70, it normally pulls back, comes down to the ground about a 50 mark where the red dotted lines are, and then bounces back up. It's kind of like how you see here. It goes up, comes back down, goes up, come back down, goes up, come back down. So these are some of the things that are expected, because people are looking at it and they're saying, okay, when it goes up here, we're going to sell and get it again. Now that it's broken through this area of resistance, just by looking at this at a glance, we can buy this stock. But here's the caveat. So the month of July and August is when companies are reporting for the second quarter of the year, right? So there's a lot of companies that are going to be releasing their earnings report. And for those of you who are not familiar with that, the earnings report is basically where a company says, hey, this is how much money we made for the last 3 months, for the last 3 months, which is a quarter. And investors, we look at it and we say, okay, well, that's awesome. We want to buy more shares, or that's horrible. We want to get out of the company and sell our shares, right? So they release those every 3 months because it's highly regulated. So right now we can see here, and this is one of the reasons why I love TradingView. Here you have a lightning symbol. This lightning symbol lets you know any news that came out, any announcements, right? And then this E symbol is our earnings report. So it lets us know our earnings report for this particular company is coming out August 5th. So if I was to buy this stock, I would want to be out of it, all right, by August 3rd. The reason for that is because the closer you get to your earnings report, depending on how investors feel about it, they may start selling off. It may even push the stock up if people feel very confident that the company is going to report some really good information or good news. But you also have to be careful about that because there are companies that report great information and great news as far as sales and profits, and the stock still drops because what happened is when they first report all that good information, the stock may shoot up, and then everybody that bought the stock here at this low price, when the stock shoots up, they're sell, 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 and they take their profit, and then the stock may drop. So you know, good news or bad news, you don't necessarily want to be stuck in a trade as a brand new trader with a company when their earnings report is going to be coming out. So this right here is in a really good place, but this is a stock that if I was to buy this tomorrow or even on Monday, I would want to be out of it by Friday, which is the 1st of August. Okay. And these are just some of the ways that some of the things that I teach you when you take the course that I have available on Udemy called Stock Trading Simple Beginner Guide. I show you how you would be able to go over the FinViz, filter through the over 10,200 stocks, bring it down to about 59 to 99 stocks. And just because I was explaining the whole process to you guys, you might think, oh, 99 stocks is a lot of stocks to look at, but just if once you get the hang of it, you'll be able to go through these 99 stocks just visually within 30 minutes or so. And you cannot be lazy and not want to do what we call the nerdy work and expect to be a very profitable trader. You've got to be willing to put in the work and in order to be a successful trader. Now, for those of you who are looking at watching from TikTok and whatever the case may be, you don't necessarily have to have this big setup that I have here with the multiple screens. But I'm a very active trader, so I do have a different setup than most. But at home, I do have just like a 2-screen setup, a mobile attachment for my laptop. But you don't necessarily have to have something like this. Everything that you see me doing here, you can do on one screen. And I'll be more than happy to teach you guys this, everything that I know and share the information that I have. If you guys were to go over to Udemy and sign up and take the course, and when you do sign up to the course, you get a access to my YouTube channel, where all of my students are able to, uh, on a daily basis, chat with me. We do live videos like this, and they're able to ask me questions about different stocks that they're interested in, and then we're able to go through those stocks one by one, the ones that they're interested in, and break it down and see where our possible entry point is, and exit point, and stop loss point is. So I thank you guys for tuning in. Have an awesome day, and I'll see you tomorrow. Well, I won't see you tomorrow because I don't do lives on Friday going into the weekend. So I will see you guys on Monday, same time, same place. All right.